Hello, stock pickers, money makers, wealth creators. Along with my co-host again, Thomas. Well, welcome to episode 102.
Wow, look at us go! What
Mate,
a
we're
milestone!
Chopping away at them quickly. It's very enjoyable. I really enjoyed episode 1. A lot of topical things to discuss, and I guess that's we'll say this again. Actually, to start off, do not consider this financial advice. What we talk about here is our personal thoughts on companies and markets, and make sure you speak to a professional, and make sure you do your research. So certainly get some clues here, but not a financial advice podcast.
Yeah,
Two friends having a chat.
Two friends having a chat about what they do.
Yeah,
not trying to influence anybody else.
that's it, exactly. Well, how's your week?
The week's been quite lovely, actually. Very contrast to last week's very busyness.
Yep.
The boss has been away this week.
Excellent.
Daughter's back from London.
Yep.
Borders opening.
Yep.
Wonderful. Everyone's starting to take holidays again.
Nice.
So I haven't taken my foot off the pedal necessarily, but just without interruptions, I get so much more done in the day.
Yeah.
Because, I'm doing one thing, I'm working on a spreadsheet, and then come in here, give me a hand with this quickly.
Yeah,
and then
yeah.
you're up and you're sitting there and you're listening to the explanation just to say, oh, actually, no, don't worry. Then you got to go back, you got to refine your train of thought.
Yep.
So
Refocus.
refocus.
Because then you got to make yourself a cup of tea or a cup of coffee or whatever you need to keep going.
Yeah. So it's been a very productive but relaxing week, and it's been quite nice. How's your week
Excellent.
been?
Oh, good. More of the same. But so played a little bit of golf. Went and got some new suits today, actually.
Oh, very nice. MJ Bale, is that?
No, actually, it's another brand. Ooh, you've got me on this one now. I'm not sure what it is.
Well,
But
the hard-hitting questions on this podcast.
That's right. I got a blue, a charcoal, and a green.
Oh, very nice.
Yeah, but the green's not the type of green. It's a soft green. It's more of a charcoal green. But I thought I'd try it out.
The joys of starting a new job, eh?
That's right. Week away, and looking forward to it. Really looking forward to getting back into it, getting back into dealing and working and everything that goes along with it. It's retirement will be great, but also horrific.
Yeah.
Something that I've learned about myself is that I love to always be doing things, so when I do say retire from an employee standpoint, certainly not going to stop
You
working.
got to do something.
Yeah.
You see so many people retire to die.
Yeah, that's right.
And it is so sad because you've worked your whole life.
Mm.
So many people work for retirement
That's
and
right.
then they just sit there.
Yeah.
I couldn't imagine anything sad. So you got to have something.
And it's really comes back to, like a lot of people talk about, really trying to do what you love or you really enjoy. Work's work. You have your good days and your bad days, but when you really enjoy the space that you're in, you take us for example. We go above and beyond what we do in finance. We have Beyond the Ticker, which we'll talk about. I work in mortgage broking as well, and I work in financial markets. Yourself, study in finance, work in a fund, and doing Beyond the Ticker. It's and your personal investing as well that you do, and a lot of research and time and energy. And it's not time and energy it's hard time and energy because you enjoy it. Like I really enjoy my first thing I do when I wake up in the morning is look at what's happening to the financial market, the FX markets, and then depending on if it's the time zone changeover, is look at my stocks when the market opens and what's the expectation of how the US has been overnight, because I'm just really interested to see how it's moving.
Nothing makes me more excited than getting a message in the Beyond the Ticker group chat saying, have a look at this company. And I never know if it's going up, if it's going down, or what's going on. And
The elusive question, it's always have a look at this.
Yeah, there's never buy, there's never a sell, it's just always have a look, you find out for yourself.
This is interesting. And then, it's quite funny because we have different thoughts on different companies, and we have different thoughts of different sectors, and it's good to have that other side of the coin conversation and chat. I mean, we do agree upon a lot of things as well, but that's probably because we have the same philosophy with regards to investing, so we do look for the same indicators. But in saying that, there's certain things that I won't touch, and certain things that you won't touch that
which could potentially make us money, but it's just outside of our our field of not understanding necessarily, but outside the rules that we set up for ourselves.
That's right.
Now, it's quite a nice segue into what is Beyond the Ticker.
Yeah.
What have we set up for ourselves?
The cliffhanger on episode 1, at the end of episode 1. So, I mean, well, where you go? How did it start?
So I first met Andrew in university.
Yep.
And then we also met some other like-minded friends within our university units, our classes. And, you know, our friendship and
Cohort.
our friendship grew over these sorts of conversations that we're having right now, over investments, what we're doing, what we're thinking about. And then that really grew into us looking out into the future and seeing, where do we want to be? And we both thought, oh, we'd quite like to be investment managers one day.
Yep.
And we thought we could be an investment management firm.
Yep.
And then that is the end goal. So we start off with the end goal, and then we thought, how are we going to get there? So we decided to start off as Beyond the Ticker. Ticker being that 3-letter code
Yep.
of a stock.
Excellent.
So we want to look beyond that.
Yep.
You know, really delve into companies and then find out what's good, what's bad. And then so we started Beyond the Ticker, created the website, started publishing a few reports.
Yep.
You know, because we do our own personal research into companies. And we thought, why not share that
That's right.
with everyone? What we look at personally. Once again, not advice, just personally what we look at in a company. You know, the market capitalization, the directors. We look into the ESG.
Yep.
You know, just generally the background of the company. And you can go and find all that information still on our website at beyondtheticker.com.
Yep.
And then took it from there.
Yep. It's always been good fun, and like Tom mentioned, we have a lot of these conversations, and as he said before, when we put a company in the group chat, and then everyone kind of does their own research, goes and looks at it, and gets really excited about what the potential is or what the disgust of it is. You know, and so we decided, why don't we, instead of just obviously fictitiously going and becoming a manager or a fund manager, there's steps that you need to do. There's a lot of work that's involved with it, and I guess we wanted to try to create something that we really enjoy doing, which is talking about financial markets, talking about companies, talking about trends, what's happening in the market, and we put it in a bit of a stamp in the ground, but I guess you could say a flag in the ground, and that's how Beyond the Ticker was born. And it was a way for us to really, I guess you could say, professionalize our, sort of natural conversations that we have, and the businesses that we do like to look at and invest in. So, like Tom said, check it out on the website, and that's how Beyond the Ticker was born, and it's continuing on via this podcast.
And in its essence, this podcast is Beyond the Ticker.
Yeah,
just us having a discussion about investments. That is what we've aimed to do with Beyond the Ticker. You know, we don't try and make any money from selling our articles. We just, want to have an informative conversation with each other.
Yep.
And then share that outwards with the world.
Yeah, and that was, I think, the thesis behind it was, finding a company that we enjoy, look at it, invest in it, look at the behind things that we look at, and just sort of share our thoughts, because too few times. And it's one of the things that we know about markets is that they're all over the place. A good company can be doing horrifically and have massive downtrends. A bad company can be going uptrend and people could make heaps of money, but underlyingly it's a horrific company. And so...
And we've seen a lot of them.
Yeah, always happening. Like, the frauds that happen in businesses, there's a lot of them. It's, and I love looking at that and seeing, would I have picked it? The identifying points, and I think that we've got a pretty robust, simple investment strategy that we use, but it's Theranos and all these little like tech private equity companies. They're riddled with sort of inferior products or inferior systems or an inferior company, and they've got raised all this capital, a lot of hype, then boom.
Well, there's a company called Freedom Foods.
Yep.
Which I invested in, and they were a very well-known brand. You could go into Woolworths, you could go into Coles, and you could see Freedom Food products on the shelves.
Yep.
Branded Freedom Foods. And I, as a young investor, I came in and I saw this company and I thought, there's a little bit of a growth market there. They've got quite a few brands. Could they be the next Arnott's?
Yep.
Something like that, where they have all the products under them. So I thought, all right, I'm going to get in there. I looked at the balance sheets. I did my due diligence. The wonderful fundamentals. And then all of a sudden, started seeing announcements. A director's quit.
Oh, yep.
Yeah, which is not bad news in itself, but it's a bit of a sign. Then a second director quit. And I thought, something's off here. Share price falling. All of a sudden, goes into a trading freeze. And then it came out.
Elusive trading freeze.
The trading freeze. I'm stuck. Then it comes out that they have been lying about their inventory. So they'd been audited and all this. They've been lying about the inventory.
Yep.
They didn't have what they said they had on the books, or they weren't managing it properly. And what was first in, first out, they had old products sitting there that had expired,
Yep.
which they were still counting as inventory
Yep.
on the books.
Yep.
They're now worthless. Safe to say, this has just been a podcast so far of my bad investment decisions. But
Certainly not.
I think it's a good cautious tale because, a lot of podcasts you go on, everyone says, oh, I invested in this and I made money. And it's wonderful in hindsight to look at your wins, but you also got to look at your losses and you got to figure out why and what went wrong.
Well, that's exactly right. And like we talked about, and I think it's important to have losses. It keeps you sharp. Certainly early on, and I guess we're long-term investors, so we buy businesses that we're going to be here for a long period of time. I hate to sort of go across it, but the Buffett way of investing is what we do in essence. Simple businesses that do well over time, and we reinvest in dividends and so on and so forth. But we've had wins. I mean, one of the companies we're going to talk about a little bit later on, Zip. I had a good capital gain win on those guys. I actually got out, and then it's been done horrifically, but we'll talk about that later. Yourself, you just mentioned before to me, one of the firms you got into early days went up, how many times?
Yeah, I went up 300 and something %.
There you go.
Gains. Yeah.
So we also make money as well.
We do like to make money.
We just like to share the bad ones.
Yeah, it's great to talk about.
It is.
And it's an interesting segue into the cryptocurrency market.
Yep, absolutely.
Because there's been a lot of hype around cryptocurrencies, and you see it every time cryptocurrencies are booming.
Yep.
You have that one friend that comes out of the woodworks and the bars, had a few drinks, starts chatting. Oh, I've made this much money.
Yeah.
Oh, it's going really, really well. Or trust me, this coin, this is the one you want to get on, mate.
Yeah.
And I'm myself as an investor, I do dabble in cryptocurrencies. We'll discuss that further.
Yep.
But I just sit there and I'm like, you got no idea. And it's just that positive reinforcement that the stock's going up. And then as soon as the crypto market crashes, you don't hear a peep.
Of course not.
So I like to keep the open philosophy that we're not just delusional investors. We are, we've been investing ourselves personally for quite some time.
Yep.
And you've got to embrace the losses because there are losses.
Yeah.
And the people who don't talk about the losses, those are the ones that, they don't. I don't want to be mean, but they don't really know what they're doing if they can't accept a loss and explain why it happened to you.
Someone that says to you that something's going to happen on a financial market does not know what they're doing in financial markets, because that's never the case. Experts will tell you all the time you cannot predict it. It's all over the place. And so cryptocurrency is a really speculative investment. People have done extraordinarily well out of it. I mean, it's a new sector. I wouldn't even call it little. New sector that's massively evolving, and people are getting amongst it, and it's massive market cap. It's certainly something that would have been excellent, and I think it's really interesting to have this conversation, because the guys that do well out of crypto, from my theory, are the guys that really believe in the technology. The earlier adopters of cryptocurrency that really believe in the technology, those are the guys that would have made the most amount of money. I mean, I don't have any facts to back this up, but I absolutely bet you that, because like we invest with companies, we invest in the underlying business, what they're doing, how they're doing, what their books look like, is it understandable, X, Y, and Z. It's the same with the cryptocurrency investors, where they, jumped onto Bitcoin, Ethereum as well, and those big sort of coins, and really see it as a changing in payment systems basically in the world, or money, I guess you could say. And so those guys would have bought it and they would have held it, and whether the price goes up, whether the price goes down, I mean, it has trended very well on the upside for them,
Yes.
especially if they were early days. But those guys that fundamentally invest in the actual underlying theory of Bitcoin are the guys that would have done well.
Yeah, absolutely.
You know,
I myself first heard about Bitcoin in 2016, learned about the blockchain technology, learned about everything behind it. And it's a very, very attractive theory behind Bitcoin.
Yeah.
It's a very attractive technology. You know, you can watch hundreds and hundreds of YouTube videos explaining, these are all the potential. This is what can happen. And my eyes lit up. So I'm obviously very, very cautious because higher risk.
Yep.
You know, I like to position my portfolio where more money goes towards the low risk.
Yep.
And then I put a little bit aside
Little chunk.
for those high risk, because
Yeah.
there's potentially high reward
Yeah.
for the high risk. So I put a little bit towards Bitcoin, put a little bit towards Bitcoin Cash.
Yep.
Now we can get into discussion on a later episode about, you know, the difference between the two and why I think Bitcoin Cash is better. But yeah, have you invested in cryptocurrency?
I have dabbled in it to see how it is. I just don't. I don't want to say I don't understand it, because I absolutely do understand it, and I understand the way that it operates with regards to, in a similar concept with gold, scarcity is what makes its value. Certainly from Bitcoin standpoint, 21 million coins, I think it is, that will ever totally be done. So I understand it, but what got me a little bit off it, I guess you could say, is the adoption or making of all these different types of coins, and then every Tom, Dick, and Harry started making coins, and it was kind of becoming a really saturated market. And I'm sure that people do very well out of it. And from a technical trading or technical analysis standpoint, it's easier to do. Oh, well, it's never easy to do, but because there's so many retail investors involved with it, the psychology of them can be seen a bit more in technical analysis. But it's to answer your question, I have invested in it, dabbled in it to see how it is, and I still hold a little bit, but it's not of any substance comparatively to my equity holdings that I have. And I think I would feel more comfortable, and I would like to invest in a riskier company that I think that the sector has an opportunity, rather than crypto. That's my personal risk analysis on what. But I also don't want to be too bundled into equities and shares. Like, having a bit of diversity is good, obviously, but that's just my thought on it.
Very interesting.
Bit of the other side of the same coin, maybe.
I'd like to touch briefly on NFTs as well.
Oh yes, yep.
If you would like. So they're obviously blowing up in popularity.
50 billion market cap now.
Ridiculous. Mind you, I've never really understood physical fine art either myself.
Yeah.
When they say the Mona Lisa's priceless, I don't understand. So
Someone could buy it.
So when you put NFTs on the same tier as art, and you say, well, look, you're just buying the digital rights to digital art. I can conceptualize that, and it makes sense to me. And look, if you enjoy a picture of a monkey and you want to pay $500,000 to own that, because it's like the same thing. Like, I can just look up on Google Images a picture of the Mona Lisa.
Yep.
And I can enjoy it and I can appreciate it, but it's not the real thing. And although I can get up the exact same photo of that monkey, I know deep down in my heart that if I print that out and I put it on the wall, I do not own the NFT behind it. So I do see some value behind it. Now, I feel like the sector is really missing the opportunity to expand NFTs into something much more fungible.
Yep.
If I was to sell my car, I could make an NFT of my car. and sell it.
Yeah.
And I think there's lots of potential for a company or a business to take the tokens, take the blockchain, and really put it into the real world.
Yeah.
And I think we're going to see some central banks creating digital currencies on the blockchain, for us everyday citizens to use at your Woolworths, at your Coles. And I don't think it's as far away as we think.
Yep.
But it's definitely not going to be in the form we see right now with Bitcoin. But I think something else is coming down the pipeline using this technology that's, going to change the way we transact.
And look, I agree with you. The blockchain technology is good. It is fundamentally operates very well from a transactional standpoint. Some of the downfalls with it, and it's, is your anti-money laundering, counterterrorism laws that are involved with banking and transactions, and not being able to recall funds. So making an error payment, you can't recall it.
Yeah.
So I don't know what it's going to look like, but certainly the adoption of the technology with regulation is when will see it sort of crystallize into a everyday adoption, I guess you could say, everyday application. Because there's still some areas that, as much as the reason why it was set up is to try to avoid the corporate governance and the government and everything around that, it is necessary to have that involved with any technology that's going to be long lasting.
Which is unfortunate, but it makes it very difficult as an investor to say, I'm going to put my money here and I'm going to make money off this.
Yeah.
Because to put all your money in Bitcoin, thinking it's going to be the next currency of the world, chance in a million.
Yeah.
Chance in a million.
Yeah.
But so I guess that's my stance.
Yeah.
That's why I have a little bit in there.
Yep.
But obviously uncertain as to where it's completely going.
Yeah, it's going to be interesting to see to track that industry. It's hard for me to comment on it because I just don't know. But I do think that we're going to see some adoption, but it's just not going to be in the current form.
Well, a big supporter of cryptocurrency is someone that a lot of people are a fanboy of, and that's Mr. Musk.
Yep, Elon Musk. He would be very well-known, like he's got to be up there as one of those well-known people at the moment.
You would have to be worldwide.
Yeah,
he's reached a level of fame.
Yeah.
He's a household name.
He is,
and he's an interesting character. Just have a look at some of his Twitter posts, and you'll know what I'm talking about. He says some ludicrous things at times. And it's not just the headline, he smoked weed on the Joe Rogan podcast. He does say some, outrageous things. He's a bit of a free thinker, which you have to be to get to where he is. Famous for pumping Dogecoin and selling Teslas for $69,420.
Among many things. I mean, but the one thing about Elon Musk that most people should know, but he started PayPal, which is a transactional technology company. That was where he made a big portion of his cash in the lead up to Tesla. And then obviously
SpaceX.
Yes, SpaceX. And what we're leading into now is the current Twitter versus Musk scenario.
Yes. So for those of you that don't know, Elon Musk has bought 10% of Twitter.
Yep.
And when you do buy 10% of a company in America, you have to disclose that you have done so.
Yep.
So obviously it's became public knowledge.
Yep.
The Elon Musk owns 10% of Twitter.
You also, from my understanding, you have to disclose your reasoning or what's your intent. Is that not the case as well?
I'm unsure about that.
I was under the impression as well, when you got to a certain level, obviously you have to announce it, that you've got X amount. It's sort of requirement, but I think that you also have to discuss about what you're going to do with it. Certainly it's generally a conversation with the board about, this is why I did this, because when you're taking a 10% stake in any major company in the world, you're doing it, it's a big capital injection to just do nothing with it, or just to business as usual type of scenario. So I could be wrong there. I might have to fact check that.
The board of Twitter has come out in response to Elon Musk buying 10%, and they've offered him a seat on the board, meaning that he'll have a more hands-on role in the company. and he's declined that.
Yep.
Meanwhile, he's been posting on his own Twitter. Oh, should we add this? Should we remove this from Twitter? Like getting everyone's polling opinions,
Yep.
generating excitement, generating hype, which I think is very interesting. And then speculation came out that he didn't accept the board position because if he did, his stock purchases would be limited at 15%.
That's right.
And people said, oh, maybe he's going for a hostile takeover. And it has now come out that Elon has proposed to purchase Twitter outright.
It's, and I guess this is best sort of hostile takeover sort of scenario that's out there for everyone to see, and the way that the techniques are used in an M&A deal where you want to be adopted or don't want to be adopted. So a hostile takeover basically means that a individual or company is trying to buy a firm that basically doesn't want to be bought. So you can go to one of their defense mechanisms that they did start with was offering him a board seat to try to bring him in rather than to sort of push him away. But that didn't work. He announced that he was going to buy the share. What was it? Is it $52 a share or around that sort of area?
So it's going to be a $33 billion deal, I think.
Yep. And then they pulled out the poison pill. Poison pill is an interesting technique with regards to takeover mechanisms, and what it means is that his shares will be drastically diluted, so he has to buy a whole bunch more shares to purchase a company. Now, it's not impossible. You'll still be able to do it, but it just means that the cost of it's going to be a lot more because you've got to buy so many extra shares over the threshold. So yeah, that's a really interesting development, and Elon Musk is worth almost close to $300 billion. This is a large percentage of his capital to buy the company.
And it's an interesting takeover as well because we say it's a hostile takeover. The board definitely doesn't want it.
Yeah.
Because Elon wants change.
Yeah.
So they're desperate to hang on to their jobs because he's going to be getting rid of them.
Yeah.
Upper management and management within Twitter has famously been going more and more towards, restricting free speech, banning this, banning that. Donald Trump's not allowed on Twitter.
Yeah.
He was banned as the president, which is, it's a whole different debate to get into.
Yeah, whatever you think about that happened, it did happen, and whether it was right or wrong is
wrong. That's happened. So Elon Musk's obviously coming in to change this. The management and the board are happy with how things are trending. So obviously the board is hostile to the takeover. But at the end of the day, the shareholders are the ones that own the company.
Yeah.
And Elon is quite a beloved figure.
He is.
By, quite a lot of people. So it's hard for me to imagine that the shareholder total population wouldn't be for the takeover. So I think the board might almost be acting out of place and not in the best interest of the shareholders in this specific point of view.
Yep.
So it's going to be very interesting to see how this plays out.
Oh, it is going to be excellent. And you touched on it perfectly, him being a figure. And he is you pull up the dictionary word for figurehead and it's Elon Musk's face. It's
you think Tesla, you think Elon
That's
Musk.
right. Yeah. And from a shareholder standpoint, I know that if I had somebody of his caliber that has experience with startups, that has experience running businesses, multi-billion-dollar businesses and selling them, a complete game changer in the car industry, I would be all for it because that guy is going to bring change. There'll be growth. There'll be, there'll be hiccups, but he's going to promote that, and him putting such a big stamp of his own equity behind it. I love that. I love looking at a firm and knowing that the people that are operating for the firm on behalf of the shareholders have huge stakes in the company because it's their own wealth that they're playing with as well. It's not just shareholders come wealth. So yeah, I would be all for it. And so if this goes to a proxy fight, I've got Elon Musk.
And he did tweet today, believe it or not, that he said that he's going to try and keep as many private investors on board when he takes over as legally possible.
Yeah.
So for me as an investor, proxy vote, I'm not overly happy with what management, what the board is doing to deliver me returns.
Yeah.
Elon says he's going to come on, says he's going to keep me not only, a part of the company's going to get better. I'm going to make more money. I'm still involved. I'm not completely bought out.
Yep.
I'm for it if I was in holding Twitter stock.
So what do you think then? Say it goes through, it becomes a private company, so it will delist,
Yep.
and you'll still have your private investors potentially, and then, or do you think they'll keep it floated?
So I think it's going to go completely private.
Yep.
And there's still going to be some private investors.
Yep. I think
So it's going to, I think that's how it's going to be structured.
Yeah.
So it's obviously going to be very different for the people who own the stock privately because they're going to be unable to trade their stock on an exchange like the ASX. So it's not like they won't be able to buy and sell as easily.
Yep.
And I think it's going to weed out those who want to be really a part of the company for the long term
that's
are
right.
obviously going to stay and hold on. And those who are not, they can sell out to Elon on his way in.
Well, so, and I think though, I mean, what an opportunity to have a conglomerate like that. Well, a company like that go into, I guess, private holding again, and then do the changes that they want to do, and then be relisted again on the market, because it's got to come back again on the market again. It can't stay private forever. I mean,
I don't know. I think it can. SpaceX is still private, and that is the biggest space organization. They have huge contracts from NASA.
yeah,
They're earning millions and millions and billions of dollars of revenue. And why does he want to make it public? For him, there's no benefit. As long as they don't need to raise capital. He doesn't want to lose control of the company.
yeah.
There's no real incentive for him.
It's interesting. I just feel as though there's always got to be an exit strategy involved with it, and I mean, maybe it's just
It's Elon Musk. He doesn't need the money. He doesn't need to exit.
This is true. This is very true. Yeah, look, I can see your points exactly. It'll be really interesting to follow. That's the main thing,
It's going to be very interesting to see how this plays out.
and how it will change. I mean, the one thing that I found, being in Australia, comparatively to the States, because the States have adopted Twitter like nothing. Like everyone's got I've got a Twitter account, but I don't check it, and I don't think it's really been adopted. I mean, like Facebook or Instagram has been in Australia, but certainly from a information standpoint, is the quickest social media to get your information.
Yeah,
by a long way. So that it's got
look,
huge
half
positives.
of what we've said today is based on what's on Twitter.
That's right.
It's unbelievable. People, and I see with ABC News, they're putting tweets in their news report. it's unbelievable.
They're a competitor. It's like getting Channel 7 news report and putting it on Channel 9.
Yeah, so you're getting it exactly. You're getting it straight from the source.
Yeah, this is going to be an interesting development. I'm interested to see how it goes.
And finally, before we go, you said we're going to get around to it. Zip.
Yeah. Oh, talk about cryptocurrency and volatility. The buy now, pay later space, that's been an interesting area.
Australia was a first mover on the buy now, pay later. So we have really been in the front seat of a rocket
Yep.
that's gone up, parabolic,
Yep.
and now it's coming back down.
I still feel as though it was one of my missed opportunities that I didn't invest into Afterpay when I wanted to. I looked at the company, I saw what they were trying to do, and I just thought they were a little bit expensive at the time. I can't remember what it was. It might have been $20 but I just felt like it wasn't getting adopted that quickly, and then it went on a rocket ship, 130 or something. Then it got bought out by a firm in the States, and now is listed under a conglomerate in the States on the New York Stock Exchange, I believe.
And dual listed, it's on the ASX as well.
Oh, yeah. And then, but its second cousin, Zip, also had some really good fundamentals. And I invested in Zip when I felt like I missed out on a bit of FOMO. But they had expansion, and they bought a company in the United States that had some good traction. Instead of trying to grow from nothing like Zip did, like Afterpay did, I thought Zip had a better approach with acquiring an already established firm and kind of like rebranding. But they didn't end up rebranding, which I think maybe should have to make it similar across the globe. But the share price, and the graph. Pull up Zip and have a look at it. It's disgusting.
It is. They were a rocket ship going straight to the moon, and they've come plummeting back down to really their pre-2018 price.
That looks like. I mean, that's lower than, or as low as when the crash happened, the COVID crash.
That's this currently
Unbelievable.
sitting at $1.25 for all our listeners out there, and they peaked at around $14.50 a share.
Yeah.
So if you got in at the peak,
Yeah.
you've made some huge losses.
Yeah.
And-
Yeah. I mean, this is where having a understanding of why you invested in something gives you a bit of a backbone to hold on to it. And it could be a double-edged sword, because you could think that the company you've done some analysis on it, you think it's undervalued at 15, you think it's going to go places, and it doesn't. And this is what happens, companies lose market share for whatever reason, or the market just trends the other direction, and guess what? You're holding on to a loser, and that's sort of the way it is. But and I bought Zip. It would have been around about
$5. Was
yeah,
it?
about there, about 5. I held onto it, and like I said, I actually liked Zip. The fundamentals of it, I thought they were doing really well. And then they skyrocketed, and I'm a big. I don't like yo-yos.
Yeah.
Give me 5, 10, 15% growth annually. That's it. Comfortable.
Yeah, steady growth. Long term.
And so when I doubled my money with Zip, I was like, this is going to come down, because it's just, I don't see it. So I cashed out. I was happy with the return. Like, if I had got that return over a couple of years, I would have been happy. So the fact that I got it earlier was, crystallized that. No worries. I'm lucky I did that.
Yeah. I think Afterpay shareholders are also very lucky that Afterpay sold when it did,
Yeah.
because they I tell you what, the owners, they got out at the peak.
Oh,
The owners cashed out so much money
Yep.
before it got sold as well.
yeah.
And it sold for a little bit lower than the peak.
Yep.
I think the peak was about 120,
Yeah.
sold at
I
80.
think it might have been 130. 130s, I think.
It was insane.
It was an unbelievable run. It was. I mean, news agencies were saying Afterpay was the investment of the year.
Yeah. Yeah.
It had that much growth.
And they're very fortunate that it got sold when it did. Otherwise, I think we'd see a similar story to Zip, where they're sitting back
Yeah.
at $10 a share.
Yep.
Which now they're obviously been bought out by Square. So anyone who had shares in Afterpay and didn't sell them before the merger, they will now have Square shares.
Yep.
And obviously Square's a lot more diverse than just the Afterpay
Yep.
and the buy now pay later sector. So they've got a lot more going on. So
Yeah.
they're very fortunate.
It is,
Those
yeah.
share prices held up.
And I think that now, looking at retrospectively, I guess you could say, Afterpay have done it a bit better than Zip, I think. They certainly have the market share.
Yeah.
And I thought that Zip was going to be able to impact that, but I don't feel like they have. So, the share price certainly indicates that they haven't. There's no confidence there from the shareholders.
No. a lot of there'd be quite a few sad people right now.
I could
Quite a few
I'll
sad
tell you a story
showers.
actually. I wasn't gonna bring it up, but I was actually sitting down south at Vas Felix for lunch, and there was a couple of guys sitting next to me, and I don't eavesdrop, but I hear things, and I heard them talking about Zip, and I think guys were sort of talking about losing X, Y, Z amount of money on Zip, and that was a few months ago. So they've fallen even further if they've held on to it. So there's certainly some sorry feeling guys out there, but this is why you have diversity, because on the flip side of that coin, you're going to have firms that did the opposite, and this is where that risk return ratio comes into play, where no way these buy now pay later companies would have been a blue chip investment. It's it's a risk.
They weren't making profit.
No.
I think whenever you're investing in a company that's not making profit, you really got to have a second look at yourself and think, why? Why?
Yep.
What's in it for me?
Exactly.
Is there still enough return in this company to warrant the fact that it is bleeding money?
That's right. Yeah, I mean, the classic example is Uber. I still think they haven't turned a profit yet. Mark Cuban said it really well. Why would I invest in a company that's gone 8 years and they haven't turned a profit?
Yeah.
I understand that it's a global business.
It's just you're
Everyone
buying
knows
a
about
brand name.
Yeah.
You're buying a brand name.
There's only a certain amount of goodwill in that. You could sell it for the brand name for X, but I think this. I personally, looking at what's happening, I think that's why we're seeing these incremental increases in servicing costs go up with Uber Eats and all that kind of things, because they can't keep going back to market and raising capital.
No.
They have to start making money.
Yeah, and the problem is people are only using them because they're cheap.
Yeah.
So as soon as they start trying to make money and raising those prices ever so slightly, regardless of what end it's done on, whether you pay the workers less,
That's right.
you're not going to have drivers.
Yeah.
There's not going to be enough availability. Customers are not going to go on it.
Yeah.
Prices are higher. Customers, once again, they're going to turn back to taxis.
That's right.
It's very unfortunate, but it's just one of those things that you've really got to think long and hard before you buy a company that it's not making a profit.
Yeah, but we didn't actually initially think about talking about Uber, but it has sort of creeped its way in. But it was a game changer. When it's a game changer for the industry. I mean,
it's done very, very well.
Yeah. I mean, if you're a shareholder, you would be very happy with the capital gains you've had. But I mean, now
as a consumer, I'm very happy because
I think as a consumer, you're more happy. I mean, I think that Uber and what they've done would have reduced drink driving exponentially, like more than any single company or individual or firm or organization would have ever done. Uber, I honestly reckon that. Why? Because when you are out and about and waiting for a taxi, you're not going to get one. You know it. You're not going to get one.
And especially if you're somewhere more niche, like a friend's house, a couple of suburbs away. Trying to call a taxi at midnight to get you home, it's just not going to happen. You just,
As an adopter from it, my love of it initially was that I can see who's picking me up. I can see the car coming. How long is it going to be here?
Yeah.
The line that I hate the most, you'll get the next available. Well, what does that mean?
Yeah.
That was, that's why I went to Uber. And it's, like I said, as a consumer, you love it. As a business, I hope it still stays around, but it needs to start making money somehow.
Yeah. Something's got to change.
Yeah.
Well, I think that's a good place to leave it for this episode. It's episode number 2 of the Beyond the Ticker podcast.
Yeah.
You can find us at our socials, beyondtheticker.org. Feel free to reach out if there's any companies that you want us to have a look at, that maybe you're watching, maybe you hold, you want to hear our thoughts on it, please reach out. We'd love to hear from you. And
Thank you all for listening. It's been a pleasure, and we'll see you at episode 3.